Yeah, partially functional. Half of me is comfortable, the other half is...
Okay, so in this video, I'm going to be doing a trade breakdown on a GBPUSD trade that I took yesterday. Now, like my last video, I'm going to do a top-down analysis, starting with the weekly and ending on the 1 minute entry. So, starting here with this low. Now, this low was a weak low as it failed to take out the previous swing high up here. So the market came up into this high, it held, which then meant that this low was targeted. The market targeted that low, it took it out, and now we've seen the pullback begin. So moving down onto the daily. So actually back on the weekly. So what we have here, we have a range. Well, this is our current range here. So this is our high and this is our low in the market. Now what we can see is that we have many supply zones within this lower part of the leg on the daily and the 4 hour. So just marking up this one for an example, and the one above it. So these being two supply zones here, so these being in the discount of the range, so the high, the low, this is our range we're trading within. These are in the discount, so these are less likely to continue us to the downside now that we've seen our real bottom in price occur. So using this one for example, it was a strong zone as it took out the previous low here and also took out another low within there. Price pushed back into it, we saw a strong reaction, but ultimately it came back down into our previous swing low and our demand zone, which held. It held and pushed us back up to the upside, taking out that supply zone. And then like we see in the one here, we have this supply zone. We see a slight reaction to it where you could have potentially looked for some sales within, but ultimately it failed and we continued to the upside. But now we've come up into the premium of this range. So now selling within this premium is more probable or high probability than selling down here. So let's get rid of that now. Now back down to the daily. So the zone I was looking to sell from was this zone here. So we had a range of market and a strong push to the downside. We also took out this low there, and beforehand we also saw a sweep of liquidity. So that was how the daily supply zone was failed, and then below it we have liquidity to take before coming into the zone. And ultimately we tapped into this daily supply zone on the middle of December. Now moving down to the 4 hour time frame. So we swept that previous high here. We're now within this daily supply. We then saw a strong push to the downside. We broke multiple swing structures, being here and here. And then what market has done is push back up, and what we've seen happen is the first tap within this daily supply zone has now been swept, as you can see there. Now I'm looking at this bit of price action. This was our last point of demand on the 4 hour before the sweep occurred. So we swept the high to the left, we then push back down, we see a reaction to this demand zone, it then fails. It then also breaks structure here. So we've seen a demand failure and a break in structure. And then this demand zone has held, which has ultimately pushed it back up into this supply zone. To push it back up into the supply zone where we've now taken out this demand and these previous lows. So we've seen multiple demand failures and multiple breaks of structure to the downside. So my swing structure would have been something like this. Maybe this was my high, at a low here, a high, a low, a high, and then the swing low failed, which then meant that the 4 hour was bearish for me. And then moving down to the 15 minute, just to show my swing structure. My swing structure would have been something like so a high here, a low, a high, a low. We took out this low. Now the swing structure on the 15 minute is clearly bearish as well. And then just back on to the 4 hour. So now what we reacted to here is this bit of demand there. Now this demand is a reaction and a flip of some supply here to the left. So we come into this big bit of supply there. We saw the reaction, we saw a range of market and a strong push to the upside, taking out this supply zone, to which we've now mitigated this 4-hour demand zone on Tuesday. So we mitigated it on Tuesday, and then price ranged overnight. So my idea coming into this Wednesday morning was that a 4-hour and a 15-minute swing structure is bearish. We've now tapped into this 4-hour demand. Now I'm marking up this 15-minute demand. So we reacted to this 4-hour demand. We then broke structure here. Ooh. We then also broke structure here as well. So 2 bits of structure has failed. This left us a 15-minute demand zone. Now my idea was that we also have this 4-hour zone here. So what I saw happening was one of 3 things. So we were either going to continue to the upside to come into this supply zone up here to then sell, or we're going to come back down into the 15-minute demand zone where we could look to buy from, or it was going to sweep this original tap of this 4-hour demand zone to where we could sweep it and then look to buy back up into this supply zone here. But what we saw happening was, after breaking structure to the upside here, we then saw supply beginning to take control. So we're seeing some breaks of structure like so. So the lows are failing, demand is failing, and supply is beginning to take control. We also basically had 1, 2, 3 pretty much equal highs there, to which then we saw swept. So we saw a sweep of liquidity there. Okay, so then playing price on, we saw the sweep, and now we broke structure again to the downside like so. So multiple lows have failed, and multiple bits of demand has failed as well. So I then had this as my supply zone, where I was going to look to trade from to target this demand zone, to then potentially look to buy from, or potentially looking to target this low to then look to see the sweep and then take the buys up into this supply up here. So play it along. So now we come back into this supply zone here, so I'm going to move down to my 1 minute where I'm going to look for my entry. But first hand, so coming into this zone, there's no liquidity to take in the leg. So if we say this here, there's no structure, no 15-minute structure to take coming into this zone. So I'm going to need to see liquidity built within this zone, or the high gets swept, and then I could look to take sales. So we are now within my supply zone. So I'm waiting now basically to see sweeps of liquidity, demand fail, and supply hold. So moving price on. So this was our first tap into the zone. We then saw our last point of demand before the mitigation of the supply zone had now failed. We then have now seen a potential sweep being here. So our first tap in the zone has failed. We could have classed this now as potential early sellers that have been swept out the market. So I now want to see some more demand fail, to which it does there. So we see a sweep of liquidity here, we see a push down, and ultimately we have a push down, a push back up, a push down, a push back up. See another sweep of liquidity there, and then this bit of supply held there. We then react to this demand. This demand is basically the low that took out this previous high that swept the liquidity. We saw the reaction to it, and effectively what I was looking to do is take a trade from up here and then using this decisional of this flip as liquidity, like so. So this is a flip zone, as it's a demand zone. We see the reaction and we take it out, and then I had a sell order within this and covering that high like so. And looking at my targets, I'll target in this 15 minute to take 75% off, and then I was going to let the rest run if we were to potentially take out this original low. So just recapping, so we saw potential early sellers to the downside on our first tap, which also took out or broke structure. So potentially people were then looking to sell from here, because you saw if you're a chalk trader, you would have had a chalk here and another potential chalk there, so maybe you're looking to sell here, but ultimately that got ran as liquidity. We saw the liquidity sweep, we see multiple bits of demand fail, so this being our key bit of demand, but then we also see demand within here failing here, and like so. So we've seen multiple bits of demand fail, we've seen a sweep of liquidity, and then looking to take a sell from this extreme here, using the decisional as liquidity as well. So I'll just play price on. We also saw this low fail. So at this point we've seen a real shift on the 1 minute of who is in control, and multiple failures of lows as well. So if we were to draw like this, for example, something like this would be our structure. We've seen 1, 2, 3 bits of 3 lows fail at that point. Playing price on, we come into the zone very aggressively, and then we move out just as aggressively, but then this bit of demand began to hold. So my break even point was after this low would have been taken out. Now I'm going to play price along as it stalled for a long time. We then actually come back up into my original entry, and then eventually I'm now break even, and then my initial target to take 75% off my trade was this demand zone there, which I then pretty much melted after finally taking out this low here, to which I took 75% off. And then if we were to play price on, we would then see that eventually the rest of my remaining 25% was taken out, and then the buys that I was looking for occurred eventually later on in New York. So thank you for watching that breakdown. I hope you could gain some value from it, and I'll see you next time.